All right, I do have the Senior Managing Director and Vice Chairman of Blackstone right here with me, John Studzinski. It's a pleasure chatting with you once again in Davos.
Wonderful to be here. Thank
I
you.
don't want to talk to you about Trump or Modi or anybody else. I first want to talk to you about the world we are living in. From Asia onwards to US, the rise of very strong leaders. You have a phrase for them, and how different is the world going to be under all of these people?
Well, I think the world right now has become an enormous recruiting agency for change agents. And I think when you look at the populism and the domestic focus, that whether it's America, the UK with Brexit, and even what you've seen in India, people very much are trying to recruit leadership that is effectively leadership that represents a change and change agents. People want something different. They don't want the status quo.
So they want people like Modi in India and Abe in Japan or Trump in the US. These are really personality-driven policies. Is the world going to see that? And will the world also see policies being made on the basis of their interpersonal relationships, their commitment in the domestic markets, which is, again, rising populism?
I don't think you've seen anything since the end of World War II. When you remember, you had a very strong relationship between Roosevelt, Churchill, and ironically Stalin to solve what was basically a very strong relationship to end World War II. And I think you now are going to see an emergence of Trump and Putin and Erdogan building strong relationships with people one-on-one, and from that is going to determine which countries and which types of policies, which type of trade relationships. You saw this morning, for example, Donald Trump talking about having an early trade agreement agreed with Mrs. May at some point immediately following the inauguration.
So how will the new world order be in terms of economic policy under people like these? Very strong personalities, from Vladimir Putin to Donald Trump, to a Xi Jinping who's here in Davos, to Mr. Modi, to Abe. What is the economic landscape going to be? Are we going to see an inwardly looking world where countries are increasingly protectionist, trade barriers going up? And what is the implication of all this going to be on world trade, on global growth?
Yeah, the focus is going to be principally on domestic policies first and international relationships second. And so what domestic policies was A, about job creation, B, about making sure investment in factories and plants, and you've seen that speak so far with Trump. We'll see how far that goes. I think probably what it means also that people are going to want to see major changes in longer-term plans for job creation, particularly in the wake of technology. I mean, one of the things that people are really afraid of, if you go around the world, and one of the things that's fueling this populist movement is what happens to me in 5, 10, or 15 years? Is the blue-collar workforce basically going to be disintermediated by robotics? I'm not sure it's going to be disintermediated by robotics, but there's a great fear that's emerging.
And perhaps that fear has reasons, automated intelligence or machinery intelligence. But just to talk about Donald Trump for a minute, because that's the big event that the world is seeing. If you see Trump speak like he did in his first press conference, or the kind of comments or statements that he's made, vis-a-vis some of the people that he's recruited in his own cabinet, they're not really sharing his views. They're not really speaking the language that he's speaking in. Are we getting mixed signals from what is going to be his Oval Office? Because his cabinet seems to be more realistic, more pragmatic, more engaging with the world, whereas Mr. Trump is perhaps a little more protectionist, a little more, he's still carrying on the election rhetoric, so to say. Is this a cleverly crafted strategy, playing good cop, bad cop?
I think that there's a lot of speculation here. There have been a number of books written about this. Doris Kearns Goodwin wrote the wonderful book about Lincoln.
That's right, yes.
We've read a lot about Lyndon Johnson and about him putting people of different economic and philosophical views in his cabinet. I think you've got to regard Donald Trump as someone who is seen as how he represents ideas. Davos, we're here today talking about responsible and responsive leadership. I think people see Donald Trump as the symbol of a new type of leader. The details, I think that's going to evolve case by case. There's no question Donald Trump is a chairman, and he's going to listen to all of his advisors and all of his cabinet people.
But is Donald Trump what the doctor ordered for the US economy? Because despite all the speculation the world over, markets have given him a thumbs up. And it looks like the US growth engine or job creation will perhaps best happen under him. Do you believe he is what the doctor ordered for the US economy? Or
Well,
prescribed?
I think the market has spoken, and the market has spoken very robustly. It's one of the highest rises in share prices in the recent past. So I think whether it's the doctor or not, I think it's. I don't know. There's probably a lot of different doctors and a lot of different practices in America, so I think that's a hard question to answer. I do think the market has spoken, and like a lot of things, we have to regard this presidency right now from the standpoint of the glass is half full and respect the potential for this great leader to emerge.
What about India? Where should India be, and what should India make of some of the statements and policy intentions that are coming from what could be his Oval Office? Because his rhetoric against the pharma companies that he spoke about, and India has a huge exposure there. His rhetoric against jobs being shipped out, so obviously IT companies have an implication. Are you worried that some of these businesses will have to remodel, rework, review their strategy so far?
No, I'm not worried about it because I think we've got to focus on things one step at a time. I think Donald Trump speaks a lot. I think if you look at the international community right now, they look at India as actually one of the few, maybe one or two emerging markets or emerged markets where people actually are interested in putting capital. So I think overall people have a positive view of the Indian economy, maybe more so than people in India do. But I think they have a very positive view, and I think again the jury's out on issues like pharmaceutical. I wouldn't overanalyze every statement at this juncture. I would wait for the cabinet and the culture of the cabinet to emerge.
So there are two questions that I want to follow it up with. One is the inflow of capital in India, and will that continue? I'm going to take that next. But the US Federal Reserve, it has begun to raise rates. What does this do for capital that was flowing into India? That's question number one. And question number two also has to do with the fact that does the rise of rates by US Federal Reserve also bring about normalcy or push other central banks around the world to move towards normalcy, to move away from the steroids that they've been pumping in?
I think rates, we've been so obsessed over the last 2 or 3 years with 25 and 50 basis point rate increases. You have to increase rates an awful lot to make a material difference to address the concerns or the fears that you're implying in your question. I think people are looking at the United States and an inflated dollar. Even without increased interest rates, the U.S. economy is seen as the principal port of call right now for capital. It's in part why the dollar is so strong, and I think real assets in America are trading at a premium value, and I don't think we expect that to change. If anything, the U.S. dollar and the U.S. assets are probably going to continue to trade at a very strong value. So even if you increase interest rates, that can only make that even slightly toppier.
So when you say interest rates have to go up awfully higher for some of the fears that I spoke about, what do you expect Janet Yellen to do this year? Most people are saying she's said 3, but there will perhaps be 2 rate hikes and they'll be in small. Will this be the big rate hikes or will this be the small rate hikes?
Well, I think we expect, and my colleague Byron Ween expects, probably there to be 1 or 2 rate rises this year, somewhere between 25 and 50 basis points in total.
And that doesn't really change things much, does it?
No. I think from that standpoint, we're dancing on the head of a pin.
To come back to India, we saw a big event unfold in India that was demonetization. I don't want to get into the details of this. As an outsider who's looked at this event, what do you make of this? Was this warranted? It perhaps wasn't done very effectively and wasn't executed to the T. But if I were to just ask you, as somebody who understands the Indian market, the Indian economy, 86% of the currently outlawed, was this warranted? And what are the repercussions do you see of a move like this? I mean, just a while back, I think IMF has cut the global growth forecast and has cut India's growth forecast by about 1 percentage point from 7.6 to 6.6%. Is that an obvious repercussion and implication of demonetization, which has, of course, dented consumption and growth?
Well, first of all, 7.6 to 6.6 is still a very big number in the context of the rest of the world today. I would actually say it's probably the highest growth rate in terms of GDP forecast of any economy in the world right now that I can think of, or anyone that you would talk about in an article, in a news program like this on Davos. The demonetization it might have been clumsy, but it was obviously necessary from the standpoint of trying to simplify how the currency is managed, and it's also a longer term strategy towards going towards ultimately all countries are looking more and more at paperless currencies.
The central banks around the world get a lot of flack. The RBI, our own central bank, never got flack of that kind. They were criticized for being hawkish. They were criticized for being inflation hawks. But it is for the first time in RBI's history, in our own central bank's history, that the RBI has been ridiculed. Do you believe that the RBI has been found wanting on the whole demonetization bit, or do you actually believe that they just had to follow a cue that came in from the government, and you feel sorry for people who are responsible for policy at RBI?
I really cannot comment on because I have no idea what the actual background of all those conversations that must have taken place between the RBI and Mr. Modi and his team. So I don't really think it's something I can really shed much light on. I think what we're seeing, though, more broadly around the world, which I think is a better question to look at, is people have had enough of central banks since 2008. And they're more interested in fiscal policy, they're more interested in taxes being reduced, they're more interested in sort of tangible examples of governments investing in production and job creation, and they realize that monetary policy has gone as far as it can go. Mm-hmm. And if the world is going to continue to grow at a much healthier rate, we're going to have to look at other tools and other tactics and other strategies.
As someone who has exposure in India in terms of investments, which are the sectors that still keep you maintain your faith in India?
Well, I mean, the one we continue to obviously look at very carefully, and it's the one that would surprise you, is real estate. Mm-hmm. It's still an asset class that, whether you're looking at the primary cities or even the secondary cities as they merge, mm-hmm. There's an enormous amount of what we call buy, fix, and sell, and buy, fix, and hold opportunities in India. So real estate is clearly an opportunity. And remember, because of the population, global corporations are going to more and more move people to India, mm-hmm. Or move their facilities to India and hire Indians. They're going to want proper corporate facilities, and therefore that's going to continue to fuel the evolution of the real estate market.
But is real estate also a market where price correction is warranted? First demonetization, and then of course there's a real estate bill that's coming, and many people believe it's an asset class that will see price correction.
I think you have to look at real estate. You know, real estate in the United States, commercial real estate in the United States, has become almost as big an asset class as the stock market, mm-hmm. the U.S. stock market. And I think you have to look at, rather than looking at real estate over how prices are going to sort of cogitate or alter over 2 or 3 years, mm-hmm. I think you've got to look at it as to the way a lot of long-term pension funds and even pools of family capital look at real estate, and that is as asset classes that they want to hold for 5, 10, or 15 years, mm-hmm. because they're going to compound in value, not just in the next 2 or 3 years, but in years 10 through 12 through 15. And that's probably one of the easier, I think real estate is probably one of the more bulletproof asset classes in terms of long-term wealth appreciation.
So a quick question then on Indian markets. They usually get their cues from what is happening in the world around us. But many people believe that increasingly going forward, because capital is going to flow out of India, out of markets like India, and particularly India, and go to the US, it will be the domestic institutional investors that will drive the story. Are you someone who shares that view? And also, do you believe there is a lot of overheating still in the Indian market, because earnings haven't still picked up, and this quarter is going to be the big litmus test whether they will or not?
Well, first of all, as we step around the world, where have earnings really picked up? Earnings have been, for the most part, people have worked on margins, people have enhanced earnings marginally over the last 4 or 5 years, mm-hmm. but there have been no great, only the tech companies who've built up big earnings and big dividends and big cash flow you could sort of cite. But I think in terms of, I don't think we look upon the Indian market as mm-hmm. overheating with respect to either share prices or based on corporate performance.
So one last question before I let you go. There was a lot of euphoria when Mr. Modi did come to power with an absolute majority of 282. Investors like yourself cheered the fact that there was no fractured mandate. There was going to be one leader, decisive. Has the slow pace of economic reforms eroded some of that confidence? And what do you think the government needs to do? I mean, GST is right around the corner. They've been able to get some consensus going, today between the opposition parties and the government. But what more needs to be done? Or have you made your peace with the fact that India will reform, albeit at a very, very slow pace?
I think we've got to take a step back. And I got to know Mr. Modi when he was running Gujarat. And as you recall, Gujarat is one of the great, it's a bit like Singapore. It's one of the great success stories anywhere in the world, whether it was literacy, education, the quality of the infrastructure. You could eat off the highway. It was so clean.
That's right.
And it was beautiful. I think people clearly know that he's a leader. He's not seen as someone who's corruptible. He's seen as someone who's very single-minded. He's very hands-on. He understands how to use professional advisors. But now he's inherited this extraordinary leadership role called India, which has almost every possible check and balance and sort of factor that's challenging his leadership. So I think we have to be a little more patient. I don't think he's going anywhere, and I think his popularity and the way people regard him as a long-term leader and a problem solver for India is still very genuine. I know the international community continues to believe that he'll ultimately get there.
That's a very positive note to end this interview on. Thanks very much for speaking to us, John, once again right here in Davos. That's John Studzinski in conversation with us right here on Davos, direct at ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.